Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 72, published on December 3rd, titled Best 2021 Renewable Energy Stocks and More, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. I'm beginning this podcast with three great analysts who I feature regularly. They are Travis Hoyam, Howard Smith, and Daniel Folber, and they've posted an article titled 3 Renewable Energy Stocks We're Thankful For in 2021. It appears on Fool.com. Here are their picks, followed by brief quotes on them. 1. Travis Hoyam likes SunPower. He says the last few years have been a wild ride for SunPower. The company sold off its utility-scale solar business, spun off its solar panel manufacturing business, and is in the process of finding a buyer or other alternative for its commercial solar business. What's left is the residential solar installation business that's become one of the most valuable parts of the solar energy market, and it's treated investors very well. I'm thankful that SunPower found a path to success on the market and can now focus on becoming a growth stock. The company has built the infrastructure to sell, design, install, and finance residential solar projects at scale, which is what the market is rewarding today. And it made a great deal in selling its inverter business to Enphase Energy for stock that ultimately saved the company. 2. Howard Smith recommends Enphase Energy. He says, I first heard of Enphase Energy 7 years ago, and I wish I had bought Enphase stock more than 2,000% ago. Enphase recently released the 8th generation microinverter system. The IQ8 is an all-in-one system that the company says is capable of forming a microgrid during a power outage using only sunlight, providing backup power even without a battery. Enphase recently launched its battery storage system in Belgium and has also just expanded into Brazil and Italy. Enphase just announced plans to acquire Clipper Creek, an electric vehicle charging solutions company. The move into the EV sector also gives Enphase a path to enable bidirectional charging capability for vehicle-to-home and vehicle-to-grid applications. 3. Daniel Fulbar picks Lucid Group. From its pre-merger stint with Churchill Capital 4 to its merger in July to reaching deliveries in late October, Lucid has given investors a wild, volatile, and quite often stressful experience in 2021. But so far this year, Lucid is the best performing automaker in the world, giving investors who have stayed the course a fourfold return. In just a year, Lucid has transformed itself from an unproven company to a company with some of the best technology in the entire electric vehicle industry. The short-term outlook looks impressive. Its balance sheet is rich with cash. Its manufacturing plant has enough capacity to meet 2022 demand. Reservations are now over 17,000, and it is on track to build 20 sales and service centers throughout the US and Canada before year-end. The medium-term outlook looks excellent as well. In 2022, the company expects to be producing 4 versions of the Lucid Air sedan at price points ranging from $77,400 to $169,000. It's also further growing its manufacturing capacity to 50,000 units by 2022, so it can handle production of the Air and Gravity SUV in 2023. Over the last 3 months, share prices of Lucid have dipped as low as $16.12 per share and as high as $57.44 a share. Despite the volatility, long-term investors hope that Lucid's growth story is maybe only in the first or second inning. End quotes. Continuing on the energy theme is this article titled Bet Big on These 2 Alternative Energy Stocks by Emma Duncan. It appeared on SchaeferResearch.com. SunPower is again recommended. Here are some of her comments. While the list of electric vehicle stocks is ever growing, alternative energy stocks have been around a little longer and thus can be seen as slightly more stable at the moment. For example, 2 noteworthy names worth exploring are First Solar Inc. and SunPower Corporation. What's more, both of these alternative energy disruptors showed up on a list of stocks that are now flashing a historic bull signal. SunPower stock has added 20% in 2021, with its recent round of lower highs finding a leg of support at both the 360-day moving average and the round $20 level. Meanwhile, First Solar stock has added just over 9% this calendar year and has seen a trend line of support near $103 in the past few weeks. SunPower stock has pulled back to its 40-day moving average after spending a significant period of time above it. According to data from Schaefer's senior quantitative analyst, Rocky White, a notable 7 similar signals have occurred during the past 3 years. The security saw a positive 1-month return 71% of the time, averaging a 6.4% gain. Last seen at $30.45, a similar move would put SunPower above $32, just below its 6-month highs. For First Solar stock, the equity recently pulled back to its 80-day moving average, after spending a significant period of time above it. Per White, 5 similar signals have occurred during the past 3 years. First Solar enjoyed a positive 1-month return in 80% of those cases, averaging an impressive 9.8% gain. From its current perch of $106.65, a similar move would put the security back above the $117 level, within a chip shot of its 10-year peak. Both stocks also look ripe for a fresh round of bullish attention too. Of the 14 and 11 analysts following First Solar and SunPower respectively, 7 and 10 carry tepid, hold or worse recommendations. In simpler terms, this leaves ample room for upgrades should these trend lines prove to be historical springboards. Short interest has been building on SunPower stock too. At the equity's average pace of daily trading, it would take shorts the better part of a week to buy back their bearish bets. First Solar and SunPower options also look affordable from an options standpoint. Options players are pricing in relatively low volatility expectations at the moment. End quotes. Now this is interesting. Kate Birch pens an article titled Deloitte, Top 10 Fastest Growing Tech Companies in Canada. However, only one is a public company, and it, fortunately, has ESG credentials. Its name is mCloud Technologies. Here's what she says about it. Quote, not only is NASDAQ-listed mCloud Technologies ranked 10th in Canada, 57th America-wide on the latest Fast 500 list, and having experienced growth of 3,003%, but it has further been named number 2 on Deloitte's Clean Technology Fast 50 in Canada. Founded in Calgary in 2010, mCloud has become a leading provider of AI-powered asset management and ESG solutions. Focused on unlocking the untapped potential of energy-intensive assets with AI and analytics, curbing energy waste and maximizing energy production, mCloud has a global presence and offices worldwide, boasting more than 100 blue-chip customers and over 62,000 assets connected in thousands of locations worldwide. End quote. And finally, Zacks Equity Research has produced this research titled 4 Funds to Buy as Sustainable Investing Hits Record High. Here are the US funds they like, followed by some of their research comments. Please note that there are links on this podcast's web page to see how each fund performed compared to its category and other number 1 and 2 ranked mutual funds. Quote, we handpicked 4 sustainable investment-based mutual funds. All these funds carry a Zacks mutual fund rank number 1, strong buy, or 2, buy. In addition, the minimum initial investment for these funds is within $5,000. 1. Janus Henderson Global Technology and Innovation Fund Class A. Aims for long-term capital growth. The fund invests the majority of net assets in securities of companies benefiting from advances or improvements in technology. This sector tech product has a history of positive total returns for more than 10 years. Specifically, this fund's returns are 34.9% and 30.3% over the past 3 and 5 year periods, respectively. Janus Henderson Global Technology and Innovation Fund Class A has a Zacks mutual fund rank of 1 and an annual expense ratio of 0.99%, compared with the category average of 1.05%. 2. Calvert Equity Fund Class A aims for growth of capital through investment in stocks believed to offer opportunities for potential capital appreciation. The fund invests the majority of assets in common stocks of companies that rank among the top 1,000 U.S. listed companies. This Zacks large cap growth product has a history of positive total returns for more than 10 years. Specifically, Calvert Equity Fund Class A has a 3 and 5 year returns of 26.1% and 22.9%, respectively. Calvert Equity Fund Class A has a Zacks mutual fund rank number 1 and an annual expense ratio of 0.94%, compared to the category average of 0.99%. 3. Parnassus Mid-Cap Growth Fund Investor aims for capital appreciation. The fund invests the majority of assets in mid-sized growth companies. The Zacks Sector Large Cap Value has a history of positive total returns for more than 10 years. Specifically, Parnassus Mid-Cap Growth Fund Investor has returned 20.2% and 16.4% for the 3 and 5 year periods, respectively. Parnassus Mid-Cap Growth Fund Investor has a Zacks mutual fund rank number 2 and an annual expense ratio of 0.83%, below the category average of 1.09%. 4. New Alternatives Fund Class A aims for long-term capital growth with income as its secondary objective. It primarily invests in common stocks of companies and even in other equity securities such as real estate, investment trusts, and American depository receipts. This Zacks Sector Other product has a history of positive total returns for more than 10 years. Specifically, it has 3 and 5 year returns of 32.4% and 19.9%, respectively. New Alternatives Fund Class A has a Zacks mutual fund rank number 2 and an annual expense ratio of 0.96%, compared to the category average of 1.26%. End quotes. Well, these are my top news stories with their stock and fund tips for this podcast. Best 2021 renewable energy stocks and more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on December 17th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.